Welcome back for another top-notch video. This week, guys, we're talking about the week of 25 Jan through 29 Jan. This channel is all about the TSP, or the Thrift Savings Plan. We also talk about if you're in brokerage or Roth IRA accounts, retirement accounts. We go over the ETFs, IVV, VXF, EFA, and AGG. What do those all mean? What does that say? Well, basically, our channel goes over these funds. We do kind of a broad stroke overview, and then we go into a more technical analysis. If you're on the Thrift Savings Plan, we go over these funds here, Roth IRA brokerage accounts, these funds here, and these funds here equal the S&P 500. These funds here, small caps. This one here, international markets, and this one here is bonds. If you guys have any questions, please write them in the comments below. Please like, subscribe. We're going to dig right into it. The first thing we like to look at is this site called TSP Talk. Great website. Please check it out. Kind of gives us the share prices for the week, year, month, and day. And so what we want to look at here, which is really interesting for those in the Thrift Savings Plan or in those ETF funds, for the week, as you can see, it was a really down week, guys. Big down week towards the end of January. These are big losses here towards the end, 3%, 4%, and 3% for our equity funds, C, S, and I funds. This is IVV, VXF, and EFA. Bonds was up just a tad week, but it's still down for the year. With this week, guys, that also puts us under the year for the C and I fund, which means the top-notch channel is now beating the S&P 500. We are above the C fund for the year, so we're doing very well. Just a little bit behind on that S fund. We'll have to wait and see where things go from there. We'll do kind of our broad overview history and then go into that more technical analysis and give you guys an idea of where you should have funds. Again, TSP website, this is some comments that they go over for the week, so I just want to go over those as well. Have some really good charts here. So this is SPY, or the S&P 500, IVV, or the C fund. As you can see, for most of January, we were above the 20-day moving average, doing very well, but we were bumping against this upper trend line here. And then towards the end of January here, we had our first breakdown. We got back above that. We have an open gap here, which we thought might get filled. It did not, and then it broke again down below the 20-day moving average. Now we're hitting the 50-day moving average. If we cross below this, guys, it could be pretty bad. The jump from the 50-day moving average down to the 200-day moving average is quite significant, so please keep that in mind. For the S fund, fund is looking a little bit better for the week. As you can see here, our 20-day moving average was also crossed. We are below that just a tad, have not hit the 50-day moving average yet, so we could see a little bit of more damage to be done on this fund. We'll have to go and see what happens from there. And then, I don't know, with this trend line, we'll see what happens there. Since we broke this 20-day moving average and the trend line, I'm thinking that we could come down and hit the 50-day, but it doesn't look as bad as that S&P 500 fund. Again, this could be just touching it, but we don't know just yet. We'll look at that in the technical analysis. And then EFA is kind of a mess of a chart. As you can see, we did finally cross that 20-day moving average as well. This chart has some other problems, though. I'd be more cautious to get in EFA or the I fund, international markets, because there's so many open gaps. Typically, open gaps tend to be filled, and we're missing one right below the 50-day moving average, another one down here, and then finally at the 200-day moving average, missing a big one. So I wouldn't be surprised if we came back down here to fill this open gap, and that's quite a significant downturn for this fund, so be cautious with that. And finally, bonds, another really interesting fund here. Kind of really towards the beginning of January, just took a massive hit for some reason. I'm not sure why that happened. Dropped below our moving averages. We don't have any trend lines drawn in here. We were able to get above those, but then we crossed back below that, and we still have an open gap here. Not a really good place to be below these moving averages. Let's go into our charts, our technical analysis, and where we think we should be allocated for the week. So the first chart we like to look at is IVV, and just kind of show you guys where we're at on this big chart here, technical analysis wise. And with IVV, as you can see, we crossed that moving average like I mentioned. We're right at that 50-day moving average, so that is very interesting. And like I said, the trend lines on this chart are way below, and so is the 200-day moving average. Way below down here, guys. That is not a positive thing if we cross that this next week. So be in mind for negative action, and be ready for the volatility to pick up if that happens. Or we could bounce off this and move more towards the top. On the technical analysis for IVV or the C fund, I'll walk you through this. If you're a new listener, there's two signs we like to look at. We look at the derivative oscillator. What that is the green and red bars. When green bars are going down into red bars, price goes down. This is price. Price goes down, tends to go down. So that's one of the indicators we like to look at. And when red bars go up into green bars, price tends to go up. And so that's one of our indicators. The other indicator we like to look at is called the price percentage oscillator. What that is the blue line, and if the blue line is above our moving average line, okay, that means price also tends to go up. So the blue line is above red here, our moving average, price goes up. When the PPO line goes below red, price tends to go down, down just a little bit there. And so what do we see for this? And then we look at long-term charts, which is a weekly chart for what things will go for in the long term. And then the short-term charts. Again, price up here, our indicators down here, and then we give kind of like a stoplight of where you think you should be. Red not being in the charts, yellow proceed with caution, and green should be in charts. So all that being said, let's look at our technical analysis for this week for the weekly charts of IVV or the C fund. As you can see here, we have our two indicators, two red signs here, guys, two big red signs. Look at this. Our derivative oscillator is dropping. This is 1, 2, 3 weeks of dropping here. That is negative, no good there. And our PPO line just crossed our moving average, also a negative sign. This is a red stoplight, guys. We do not want to be involved in IVV or the S&P 500 at this time. We want this to kind of level the bubbles out and see where this goes from there. We saw this back on January 8th, and we got out a little bit early. Missed a week here or so of up movement, but overall, not bad. We are above this market for now. And another warning sign that we saw, guys, is price up here is showing us something interesting. When we have a big stick on the top and a big stick on the bottom with price in the middle, that means investors are very indecisive about price. They don't know what to do next. So that being said, with the indicators that we have of all market participants, we really just want to be in a red light right now, cautious out of this fund, and wait to see where things will go from here. Hopefully, you could make some moves before the January ended for those in TSPs, or if in your brokerage accounts, I would just limit your portfolio a little bit with the exposure. On a short-term chart for IVV or the C fund, also very negative signs here. As you can see, our derivative oscillator is way in the negative here. PPO line way in the negative over that moving average. Everything is way down. That is a red light, stop light. Need to stay out of this fund for right now. Even price here, we have these which are called Bollinger Bands, this kind of bluish lines. We are at the very bottom of our bluish lines down here with negative candlesticks coming down for price. So very negative, do not want to be involved in this fund. Let's move on to the S fund or VXF. What are we seeing? With VXF, we've had this trend line drawn, this shorter trend line in here since November. We bounced off that once, but here we crossed that. So that's not like November. It's a little bit different. Saw a huge rise out of November, and it stayed at the very top of that trend line, was never able to cross that. Now we broke that here. I wouldn't be surprised if it came down to hit the 50-day moving average here, or we have this trend line that's way down here, and then we have a 200-day moving average down here. So all things to keep in mind. And now this could act as resistance as well. So just keep that in mind moving forward with our charts. On a technical analysis for VXF, same indicators we talked about with the other funds. Here they are down here. What are we seeing? As you can see, our derivative oscillator has moved off since the beginning of the year. This is 1, 2, 3, 4, 5. Now, charts and price did not react to that. Very positive. We got a little bit spooked with that. We said proceed with caution in here. Should have limited the portfolio a little bit. Instead, we got out. We should stayed in just a little bit. But now we are starting to see even bigger indicators. This is a big drop here. And then on top of that, our PPO line over that moving average is getting very close. This is still a proceed with caution chart, but it could very quickly turn into a red chart or red stoplight for next week to get out of this fund. Again, we have the spinning top up here for price. So keep that in mind, guys. Please be cautious moving forward with the S fund. Another chart we want to look at now is EFA. This is the I fund. What is happening with that? Like I mentioned on that other chart, a lot of open gaps in here. Not usually good to see. And look at this. It just crossed that 50-day moving average. Look at the gap here, guys. If this were to fall here, that is really significant. These could now act as resistance. So just another really chart. I would just not want to be involved in this in case this takes a plunge. Price can move very quickly, especially with a lot of us, in the working market. 1 or 2 days of not checking charts, this could be significant. So please be cautious with EFA. let's look at it from a technical analysis. Technical analysis for EFA, what are we seeing? As you can see, same indicators as before, guys. Derivative Oscillator really dropping off here. We are at, we went from a 3.0 to a 1.0, so that's a big drop there. PPO line is just about to cross there, so we are going to proceed with caution. But this could easily change into a red stoplight chart of get out of funds immediately by next week. So be careful with this fund. Little spinning top here, not as bad as the other ones, but please proceed with caution. Yellow light for sure. On a short-term chart, as you can see, we've been negative in this chart for a very long time. There's a reason we haven't been involved in it, and if you think about it, we've been in this chart since, I mean, even if you got in right towards the beginning of the year, you'd still been in the negative towards the end of this month. So we had a little pop here in the beginning of January, and then our indicators, both derivative oscillator and PPO line, have been in the red on the short-term chart for the entire month, and they continue to do that, moving down, continuing to move down towards the end of this month. So short-term and long-term charts, this is a red light for sure for on the short-term, so not to get involved in the short-term, and then the long-term charts is proceed with caution. Not a good place to get in, not a good place to jump in, and if you're in, maybe start pulling funds out. All right, moving on to our last fund, which is AGG. This fund is so tight in here, guys. Look at these trend lines. It's been moving like this ever since August. It's been a downward trend ever since August. It is still below all our moving averages, really just bouncing back and forth between these two. I don't think it'll break this, but it's just not trending in the right direction. That's all I really have to say about that. Moving to our technical analysis for AGG, long-term charts, same indicators here. What do we see? We did see one thing positive this week. We saw the derivative oscillator pop up just a little bit. We were at negative 2.76. We went to negative 2.72. So a little bit positive there. Not enough to move the needle though. So that's a proceed with caution. But our PPO line is still under. So that is also at one indicator bad, one indicator good. So that is a yellow light. Proceed with caution. If you're there, just be careful with your funds. We're looking for 2 green lights in order. Our green light, both indicators up to be better. Price is continuing to downward trend. Look at price, guys. You know, ever since August, just in a downward trend there. So please keep that in mind. That's long-term charts. Short-term charts, what do we look at? Ew, also not looking good, guys. Short-term basis, not a time to jump into AGG, as our derivative oscillator is now negative, and our PPO line is now below our moving average. 2 negative signs. That's a red light. Do not get involved on the short-term charts. That is all of our charts, guys. Let's go back to our little spreadsheet here. So what does that mean for the Top Notch channel? For us, with all the proceed with cautions and everything else, we jumped out towards the beginning of January. We've been in cash, or the G fund for those in TSP, for some time. We are above the S&P 500 now, and the I fund, or basically the C and I fund. We are beating those funds for the year. We'll have to proceed with caution to try and stay above those funds, but overall we feel pretty good about our position. If you guys have questions, comments, or concerns, please write those down below. And always, please like and subscribe. Really appreciate you guys following along. That's another top-notch video. We'll see you guys next time.